Hello, I'm Tony Boyajian. Welcome to Compass Global Markets Weekly Foreign Exchange Update. Markets have been a little bit quiet over the last 48 hours because of some financial market holidays in the US and the UK. However, tonight in the US we have a very important piece of data coming out, the Fed's favourite measure of inflation. It's called the PCE deflator. It's for the month of April. It comes out around about 10:30 p.m. Sydney time tonight. The core PCE deflator, as they call it, has been below the Fed's targeted 2% threshold, and it's been like that for the past 5 years. Slow US wage growth suggests that that core PCE deflator will remain weak, which will weigh on US interest rate expectations and also undermine the US dollar. Now, we've seen the US dollar sell off in the past couple of weeks as a result of some alleged political scandals against the Trump administration. It's raised suspicion of this so-called obstruction of justice by President Trump, and concerns that his pro-US economic policy of tax reform and fiscal spending could be derailed, and it still has to pass through the US Congress, which means it's going to take time as deliberations continue. In one sentence, the Trump euphoria has certainly subsided. It seems like US economic growth has underwhelmed, and this is the reason why the US dollar weakness persists. Now, the Federal Reserve in the US is unlikely to raise interest rates aggressively in a slowing economy, and that's what the data shows us at the moment. Now, in 2 weeks' time, the market is almost fully factored in a 0.25% rate hike in the US. But we don't expect any further US upside momentum to continue because of that misalignment between the Fed speak and also the weak data that we've seen regarding the US economy. In fact, one of the Fed speakers, Bullard, has recently come out and said that he only sees one more rate hike in the US this year. So it just goes to show that with the impeachment talk gathering more momentum about President Trump's longevity in power, it looks like the US downside is going to remain vulnerable. Now, the Aussie dollar also remains vulnerable. It's heading towards the weak side of that 74-cent range. It was impacted today by some building approvals figures for the month of April, which came in at an increased 4.4%, but that's following the previous month's fall of 13%. Look, the Aussie dollar faces headwinds because economic growth has been sluggish and also wages growth have been very low. We've got low inflationary pressures and a central bank, the Reserve Bank, which is sidelined regarding interest rate movements for the rest of this year. So the focus now will be on the upcoming GDP data, first quarter Australian GDP data next week on the 7th of June. So the Aussie dollar remains a sell on the rallies. Look for that 73 to 75 cent range to hold for now. Elsewhere, the euro is lower against the US and the Aussie dollars as cautious comments from ECB President Mario Draghi warning that underlying inflation remains subdued. We still expect the ECB to start tapering their asset purchases by September this year to the tune of about 10 billion euros a month, and that will continue until about June 2018. So the risk is that their refinancing rates and deposit rates will then eventually start to lift, and negative interest rates will start to move higher. This will keep the euro well supported. There is also talk of early general election chances in Italy. Now, the Italian election needs to take place by May 2018, but there's a chance they could go earlier, maybe later this year. If that happens, the euro could be undermined. Look for a bit of a sell-off because the powers to be in Italy, the government that could be formed, is certainly anti-euro, anti-establishment, which could see the euro weakness later this year. Look elsewhere, the sterling pound remains vulnerable, continues to attract the weakness based on the political uncertainty ahead of the June 8 general election. Recent opinion polls show that the Conservative Party under Prime Minister Theresa May's parliamentary majority is probably going to thin, and that could have an impact on the Brexit negotiations, which begin on the 19th of June. So we expect the sterling pound to remain weak over the course of the next week as well. You're watching Compass Global Markets. I'm Tony Boyajian. Have a great week.